if we're talking about those sectors that, as you say, are just uninvestable because they're, the whole business model is structured in a way that it is always going to be doing bad. They're pursuing a profit to a negative impact. You're going to avoid investing in those sectors and those companies. What evidence is there, if any, that a lack of investment is holding those companies back? Is there any evidence that has had an impact on those corporates, or is it the case that there'll always be some money that will find that will be happy to invest regardless of what the company's doing?
Yeah, so there is some evidence to the divestment movement working. Yeah, so the best example you can think of is thermal coal, the dirtiest fossil fuel. There's been a consistent effort from across the investment, space to start divesting from companies that continuously either mine coal or generate electricity from coal. What happened then is that was picked up also by the banks who lend to those miners and those electricity providers, and the insurance companies that insure those miners and those electricity providers. So altogether, what would happen is that it raises the cost of capital for these businesses to do what they've been doing, the nasty stuff that pollutes our climate. And it is very true that there has been stranded assets, essentially. So this is the way to call assets that previously had a value, now don't have a value because you cannot economically create money from digging things out of the ground anymore. And people have written off assets, miners have written off assets that will remain in the ground because they're no longer economical. And I do think there's other things to play. Renewables are becoming more economical, great. But this cost of capital increasing definitely does have legs in the investment movement too.
Great. So actually it's not that the cost of extraction has gone up, it's the cost of raising the capital
Both.
to do it.